Ever wonder where banks came from? It's a story that's thousands of years old, taking us back to ancient Mesopotamia, the cradle of civilization. Long before we had apps and ATMs, people were trading goods. Imagine you're a farmer who's had a great harvest. You have more grain than you can eat or store. Meanwhile, your neighbor, a potter, needs grain to feed his family until he can sell his latest batch of pots. This is where the idea of credit, the very heart of banking, was born. You could lend him some grain, and he'd pay you back later, maybe with a few extra pots as a thank you. Simple, right? But as societies grew, this system needed to get a lot more organized. This is where things get really interesting. The world's first bankers weren't pinstriped suits in skyscrapers. They were priests in massive temples called ziggurats. These temples weren't just places of worship, they were the economic centers of the city. People believed the gods owned the land and its bounty, so they brought offerings of grain, livestock, and precious metals to the temple for safekeeping. The temples had strong walls, guards, and a reputation for being sacred ground, making them the safest place around. Priests, who were among the few literate people, became the first accountants. They started recording everything on wet clay tablets. If you needed to borrow grain, you'd go to the temple. A priest would note down how much you took, and you'd be expected to pay it back with interest. A little extra to thank the gods for the loan. These clay tablets were the first loan agreements, and the temple vaults were the first banks. Merchants also saw the benefit. Instead of risking their gold and silver on dangerous trade routes, they could deposit it at the temple before a long journey. The priests would keep it safe, and the merchant could withdraw it upon their return. The temples even began issuing their own clay notes, representing a certain amount of grain or silver held in their vaults. These were essentially the earliest form of checks or banknotes, making trade much easier and safer. The system was so effective that it became the backbone of the Mesopotamian economy. The temple wasn't just a spiritual home. It was a bustling financial institution, a place of trust and economic stability, all managed by priests acting as divine bankers. But what happens when someone doesn't pay back their loan? Or when a lender charges a ridiculously high interest rate? As these financial dealings became more complex, society needed rules. Enter Hammurabi, the king of Babylon, around 1754 BC. He created one of the most famous legal documents in history, the Code of Hammurabi. Carved into a massive stone pillar for all to see, this code included laws specifically for finance. It set official interest rates for loans, 20% for silver and 33.3% for grain. This was huge. For the first time, there were regulations to prevent predatory lending and ensure fairness. The code laid out clear rules for contracts, deposits, and what happened if you couldn't repay your debt. It was the world's first financial regulatory framework. A system designed to protect both lenders and borrowers and bring order to the booming economy of Babylon. So from simple grain loans between neighbors to priests managing sacred vaults and a king carving financial laws into stone, the foundations of our modern banking system were laid in the ancient world. The trust placed in temples, the innovation of recording debts, and the creation of laws to govern it all. These are the core principles that still shape finance today. The next time you tap your card or open a banking app, remember the Mesopotamian priests and their clay tablets. That incredible blend of religion, trust, and commerce is the ancient blueprint for the entire global financial system we rely on every single day. Thanks for watching, and if you enjoyed this journey back in time, don't forget to like and subscribe for more.